Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. And world on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got its time. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. We got non-farms here. I don't know what else to say. They're pretty wide estimate. I'm expecting quite a bit of volatility on this, no matter which way it goes. Although in order to have like a really significant change, that is to say like treasuries start moving up, I think that we would have to get into like 150K or even negative numbers. And yes, like a negative print here is possible. So let's just take a quick look over here. Well, first of all, let me make sure I got my news squad going. And look at our charts here. Happened overnight. ES had a pretty good day yesterday for no apparent reason, giving up a little bit of those gains, but nothing too big. Treasuries, pretty flat. Really pretty flat past 2 days. Oil having a dip and a rally, and who knows where they're going. Gold and silver actually doing pretty good here. And Kappa having a big move yesterday. And we got Bitcoin. Bitcoin kind of, was dipping below 30,000, had a little bit of a rise, and now here this morning, another dip. I don't know. Bitcoin's not looking too hot going into the weekend, but I suppose it's not too bad. And then we've got the dollar. The dollar taking a hit yesterday, but nothing too bad. So we're just going to sit here. Oh, that's not too bad. Prancing Pony made a pretty well. Nah, he didn't. He had a winner. He had a big winner in ES. He had a big loser in oil. That's not too bad. He's been pretty diligent about posting it though. This guy, I can always tell when people come in here that they're serious about this. They come in. They're consistent. They're keeping really strict records. All right. Good morning, Octavius, and good morning, Tobias. Man, this one really could be a big deal. So the non-farms payrolls, one other thing I want to know is that we do get the average earnings month over month consensus estimate spot for. If that number is high, watch out. Okay. But the non-farms payroll, we're looking for a reading of 318. Pretty wide estimate. I think that Goldman's estimate is 250. Right? 150 would be like way outside of like the standard deviation. Negative, who knows? But hey, maybe this comes out and this is like 400,000 and everybody's like, oh, yay, the economy's fine. Elon Musk doesn't know what he's talking about. Who knows? I have this sim trade on that I probably should not be in at the moment. Oh, jeez. But, yeah, is what it is. I'm just gonna, I guess I could, I'll tell you what, we'll get out of 3 lots here. Kind of avoid the volatility a little bit. And then, if it ends up being a really good number and the treasuries just like shoot down, then I'm gonna really kick myself. But it's a sim account, so here we go. Oh no, wait, 30 seconds. My gosh, it's already, look at how drastic the pull is. I'm surprised that there's like these 5 lots. If that's you, if you've got a 5 lot sitting out there in the 10, there you go. Okay. It's like might want to cancel those. Okay, average earnings was spot 3 and the non-farms was 390. Woo. Yep. Okay. So, man, it's a good number. It was a good number. Actually, everything about this was good. Average hourly earnings in moderated spot 3. Non-farms payrolls was 390 versus 318. Like that's a really that couldn't have come out better, really. Yeah, Kevin. Hey, Kevin, I haven't seen you in a minute. How you doing? Yeah, I think that those numbers couldn't have come out better. Now let's see here. What was the unemployment rate? Oh, okay, so the unemployment rate did increase a little bit to 3.6. Interesting. So I will take at least 2 off down here at 16. Now, now what I think what the conditions in the treasury market are really, really important here. This is super slippery, man. Like that was a very large impulse that came out of that number and a absolutely massive liquidity hole that came through it. So when I'm looking at the micro 10-year, I'm thinking, and I'm not going to take a trade, by the way. I'm not going to take a live trade today because I'm supposed to be going to the hospital. So I'm not gonna mess with anything, do anything that would spoil my day. Okay, but I'm looking at the micro 10 and I'm thinking, well, there's no reason that they shouldn't be able to take out 3% today again. But for the moment, it is having trouble moving because it was just such a massive liquidity hole held out behind it that is just getting sucked back up. So this means inflation is not really, well, no, I think that okay, so US average earnings month over month last month was spot 3, the expectation was spot 4, and what we actually got was spot 3. So we are not seeing the wage inflation, which is good because the wage inflation is the thing that the Federal Reserve is really concerned about and wants to prevent happening. Okay. So, yeah. So that number being low is good. Okay. And then the non-farms payrolls were above the consensus expectation, not like massively so, but enough to create a move, right? So you got a situation where, okay, it looks like the economy is strong. It does look like, or at least it's in line with inflation pressures moderating, right? Cost inflation good, wage inflation bad. Well, I think I would say that both of them are bad, but wage inflation is the one that can spiral out of control, right? Cost inflation can lead to wage inflation, and then it just becomes a feedback loop, right? And that's why the Federal Reserve has the powers that they do, so that they can come in and short circuit that and prevent inflation from continuing to rise and keeping it at their average 2% per year target. So, I do think it means that the Federal Reserve will go forward with their tightening plans. But I also think that it means that the Federal Reserve raised interest rates 50 basis points. There was many parts of the market that took a really nasty hit. We had a really just absolutely nasty month. And the non-farms payrolls was just fine. Now, maybe it will take another month to show up. So we'll see what happens in July, right? Since when inflation is for only one sector? Well, why would you say one sector? I don't know. Like, I tell you what, the way that this inflation has played out is just an absolutely fascinating thing, right? Because there's so many different things going on, right? We do have the supply chain issues, but we also inserted a lot of money into the economy, right? And so, how much did those factors play into which sides of the economy is something that we'll be studying for decades to come, I'm sure. I'm sure. I mean, it's very important to what what the Federal Reserve does and everything. So they're gonna look at it. Since when? Well, like wages, costs, etc. Yeah. Well, so I think that one of the problems that I run into a lot when we're having this conversation is it's a political issue, and whenever there's political issues, there's a lot of like semantics come into it because some politicians really like to play games with words, right? It's like this thing like with critical race theory. They say, "No, we're not teaching critical race theory in school." And then they'll say, You don't even know what critical race theory is." So they'll say, "Well, this is what they're doing." And then they'll say, "That's not critical race theory." Like they're playing this game like because you can't define it correctly that it's not actually a thing, even though it is, right? Inflation, the issue that you come into with inflation is that especially the libertarian types will tell you that inflation means when the government prints too much money, right? But that's not actually what we define inflation as from a economic standpoint. From an economic standpoint, we only define inflation as a rise in prices, right? Because the issue is that it's not like this one little metric that you can really like conclusive. Okay, like GDP. Like GDP is something that's like super well defined, right? We can say what GDP is and calculate it very, very specifically. Inflation, like there's a bunch of different, we have like the consumer price inflation, we have the producer price inflation, we have the PCE prices, like there's a bunch of different metrics. There's the average hourly wages, right? There's a bunch of different metrics that we look at that we could kind of use to measure inflation, because the issue is that you could have inflation in one sector and not the other, and all of these sorts of things, right? So when you look at things right now, there was a rise in wage inflation, but a lot of that came from like the government stimulus. And now that the government stimulus is gone, the average hourly earnings has moderated back to its long run average at spot 3%. So that's good. It kind of says that we're not really getting the inflation in wages, right? Yeah. Wages are falling behind, not that there's no inflation in wages. Yeah. Now, I think that a big factor here, though, Lucas, was the government stimulus. I think that when the supply, like, oh, hey, I got filled. Good deal. Okay. So, relax. I also thinking to create my own inflation measure because I feel that all these measures are not accurate, but I was too lazy. Well, there's this whole thing about like there was an older way of calculating inflation and they kind of changed it. And now people are like, yeah, but if you use the old number, then the inflation is really, really high. And it's like, well, yeah, but like they changed that number for a reason. Was the reason that they changed it because it wasn't a very good measure, or was it because they were really trying to hide the real impact of inflation? And then it's a political thing again, right? But I think that the economists have a fairly good argument about why they needed to change those things. Because it was, it give us a more useful, statistically sound number. But anyways, I really think when you think about the supply chain issues, like don't let them fool you. okay? Because a lot of Democrats want to think I'm getting political. I am because it makes me mad. It's some of the stuff I'm seeing from the Democrat Party right now about economics, right? They want you to believe that it was just like everything was hunky dory, you know, all of the consumer demand and everything is just normal what it should be, and then because of the supply chain disruptions came in and that was what made the prices of everything go up. Or they say, well, people aren't really making any more. The prices are going up and the companies are making money off of it and their input costs aren't going up correlated with it. And so that means that it's just price gouging. That's what Democrats will tell you, right? It's absolute nonsense. Okay. Here's what happened. Okay. Because of pandemic era stimulus, Americans bought 20% more stuff than they normally would. So it was not just like there was all this demand that got held back during the lockdowns and it got moved forward. And then on top of that, that demand was increased by all of the stimulus that they gave, and people bought more stuff. And that created the supply chain bottleneck, in addition to just having trouble getting everything started again, right? And that created this rise. So then you're a company, you're thinking I'm going to have to raise wages, right? But there's this whole thing about, well, we think that it's transitory and so forth. And so I think that companies in general kind of tried to play it safe. You get what I mean? Like they said, well, we think that we can get away with not raising wages that much this year because it's supposed to moderate. I think that's what most people did. Now, if we get to next January and the inflation doesn't abate at all, then I think that you will see like a huge jump in average hourly earnings. But with the way that the data is going through right now, it doesn't look like that's going to happen. And meanwhile, companies are charging more for their products than what their input costs are increasing. Yeah, that is happening. You know why? Because they can, right? And how can they do that? Because the consumers have the money because it was given to them in stimulus. That's going to change very soon because the Federal Reserve is tightening. Federal Reserve is tightening, and we may come. There's going to be probably some more economic weakness at some point, and don't be a consumer, man. Anyways, I said my piece. I mean, it is what it is. But the print that we just got, really not so bad. Now, the S&P 500 did take a jump off of that number, but since that time, as the treasuries have continued to move down, the S&P 500 has moved down in sympathy with it. So they are not so happy about interest rates heading back to 3%. And I did say 3%, didn't I? Back when we were at 2.97 or whatever. Do you think Tesla is an overvalued company? I think that stock prices are not accurate assessments of the value of a company, particularly these indexes. So yeah, Tesla is probably an overvalued company, but probably most of the companies in the S&P 500 are overvalued because they're getting money into them from the S&P 500, and it's the orders that move the price, not the fundamentals. Fundamentals aren't related to price until you get to a higher time frame, like 5-year time period, right? The volume going through is way more healthy than what we had yesterday, despite having the same liquidity at BBO. Well, yeah. Well, yesterday was just a mess, wasn't it, Lucas? I had an opportunity to have made a little bit yesterday, but it would have been luck. There wasn't really a large meta order yesterday. pretty big one today. And I have to say, like, my reading was that Wednesday was a pretty key turning point. Like, I could just see it in the tape. And the reason why I say like it's a key inflection point was you had all of this news come out and the treasuries very decisively moved in a direction that was very counter to what they had been doing. So it was all at once the treasury market said, "Oh, that the Federal Reserve is going to have to keep raising rates." Like the thing is, when you kind of look at it all, they just kept the rate too low for too long, and so they're gonna have to catch up. But yeah, I think that in the long run, like 6 months from now, that the treasuries probably get to 3.5, 3.75. Yeah, this stuff becomes apparent if you look at the tape and the bid ask spread, not if you use the charts or order flow. Well, I mean, there's not really a spread in the 10-year, right? But and when you say order flow TA, I think you probably mean like volume profile, right? Because that's where I would very much agree that like, so one of the things that we can see very clearly here in this market is that there is very forceful market selling in this market, and the liquidity, well, it's at 1500, but the inside liquidity is not really very solid. So like pushes down, it's able to get sucked back up very easily, right? So you've got the high velocity, low liquidity environment with high degree of trend. Yeah. That means that the market is all on one side of something, right? And you could see the change that, before that in the week, it was just kind of like bubble up, and we'd get these aggressive moves up that were kind of more like somebody was really getting caught off sides, right? Whereas this move is, yeah, everybody in the treasury market is all at once realizing that the interest rates are going to go higher. So, and how do you see that? I don't really know of any way other than just watching the DOM. I don't think that anything else really gives you all of that nuance. The worst is oil. Liquidity is horrible and volume as well. Feels bad as a primary oil trader. Many things stopped working and mostly trading micro oil right now. Really? Well, that's good that that micro oil is there for you, because yeah, otherwise you would be taking like $10,000 of risk a day, which is insane, right? And yeah, liquidity is kind of tough. But I tell you what, something that I find happens, like here's the thing. When I look at markets statistically over a 5-year time period, okay? And I look at any kind of pattern that I can look at in a 5-year period. I can't look at what do you mean by there's no spread in ZN? What I mean is that the spread is one tick, right? So when I think of, okay, so if I was writing a paper or something, or I was doing a quantitative study and I was using the spread in my analysis, what I would be talking about is the difference in price between the best bid and the best ask, right? So right now, 1, 2, 3, 4, 5. No, I moved on me. So 4. I'm gonna say 4. Right now, the spread in the 10-year is 4, right? So in the micro tens, there is a spread, but in ZN, it's always just one tick, right? So when you're looking at a thick instrument like the 10-year, it's a little bit more difficult to sort out. It kind of turns into more of how many orders does it take to get it to tick? And when it ticks, does it come back, or is it like really solid, right? Is it like it ticks, offers solidifies, ticks, offer solidifies, or is it really random, you know? So that's why I was saying that. It was like the spread is not it's if you did that in your study, there would just always be the spread would always be one tick, and so it wouldn't tell you anything. Why have brokers different spreads? Actually, well, they shouldn't. In a futures, they shouldn't. Like they didn't just trade through 3%, man. They blew through it in the 10-year, didn't they? This this these interest rates could get ugly. Anyways, I was trying to make a point to Kevin, and y'all distracted me. I'm being super ADHD. Okay. When I look at a technical analysis setup over a 5-year time period, it's very difficult for me to find something with, a really reliable, like a Sharpe ratio above what the market would give you, essentially, right? So on risk adjusted returns, it's very difficult to find something that is better than just buy and hold. Okay. And yet we see all of these people on the internet saying, oh, I make money with technical analysis, and here's what I'm doing, etc., etc., etc. And what I find tends to happen is everybody will start using a certain kind of setup, and then all of a sudden that setup will just stop working. It's like it'll be wrong over and over and over and over again, and all of the people that were trading it blow out and stop doing it, right? And I see that happen over and over again, and it's usually like in a 1 or 2 year cycle that it seems like this happens. And that's why when you look at it over 5 years, those signals just look like noise, right? But I think that what happens is it's usually like just one little thing. It's like, okay, all these people are doing this, all these people are doing this, but sometimes the market will go into a high volatility regime. And when it goes into a high volatility regime, it's like all of those signals stop working, right? It's like everything that all of the technical analysis traders are doing all of a sudden don't work. You know what I mean? Because the high volatility comes in and it just becomes random. I've heard it said that 18 months is the cutoff when a system stops working. Yeah. And I think that it has to do, there was this study, there was a quantitative study that somebody did where they said, okay, so what tends to happen? So they made this system where they would put a player into a market, and they all had different strategies, and some of them were trend strategies and some of them were mean reversion strategies, and they were trading, right? And then those trading robots trading against each other determined where that market went. And what they found would happen, and then if you were losing money, if the strategy was losing money, then it would just stop trading, it would leave the market, right? And then over time it would bring in new strategies, right? And so what it found was that one strategy would work just by random chance. A strategy would work, and everybody would trade that strategy, and so it would work for a while, and then it would suddenly collapse. And that tended to be around like market volatility events, and then the whole ecosystem would build up again. It'd be like there'd be a bunch of different things out there, and some of them would start to work. But like when one became really dominant, that's when they were like really primed for a fall, right? So that study, it was just kind of like a thought experiment of sorts, but that study does kind of suggest this idea that the people that are profitable in technical analysis are often profitable merely because of chance, and that strategy will become popular merely because of chance, and then that causes the strategy to collapse, and that forces all of the technical analysis traders to all start over again, because the things that they're looking at are not things that are structural, right? They aren't inefficiencies that always exist. They say that this is like the tendency of people and so on and so forth. But I think the reality is that the tendency of the market on a short time frame is pretty random. That the market makers have to, account for the adverse excursion against them. And so they kind of create this diffusive thing. Like if you're a market maker right now, how do you, and you have to make both sides of the market. How do you do that, right? Because there are bids out here, right? There are bids out here. How do you do that when you've got a market that's trending so strongly in one direction? Well, you the market maker are going to have to make it easier for it to tick back up to get your fills, right? Yeah, that's why you need to go through several market cycles and regimes of profitability to say you have something solid, for sure. Discretionary trading is a lot of risk and headache for a minimal reward. Well, day trading overall is a lot of risk and headache for a minimal reward. But somebody has to do it, and I enjoy it. Buying and importing more Saudi or Iranian or Russian oil help inflation. Well, if the Saudis decided to do something, that would probably help, but they're probably not going to do anything. So it would probably require more than just one state doing something, right? It would require OPEC as a whole saying, okay, yeah, we really need to increase our output. But there's still some analysts saying that OPEC doesn't actually have the spare capacity to handle it. So it's probably going to be the case that producers are going to have to invest in more production. That's also what we are seeing with liquidity, right? Market makers pulling in, stepping out since yeah. Well, in the futures in particular, Lucas, I think so. I think that there was a lot of robots in the market, and then volatility would come around and they got screwed. And ever since that what did we call it? The liquidity crisis in 2018 or whatever it was. Right? Yeah, it was February of 2018. Ever since then, you've just like liquidity just gets worse and worse, doesn't it? And I think a lot of that may be, at least in the futures, that some of these market making firms kind of realized that their strategies didn't work very well for futures, and they left, and they went to playing stocks where there's a big spread that they can play, and retail traders that are dumb, and because like what they're doing is taking on a lot of risk, and then when you get a really volatile market and everything, those robots that don't know what's happening just get screwed. Right? It's all about what MBS is willing to give. Exactly, YouTube Finance. Like I don't think that Saudi Arabia could increase their spare capacity all by themselves, right? But OPEC as a whole could do it, and MBS just does not really care and isn't making it happen. But with the way that things are going right now, assuming that we don't have a recession, in the longer run, even OPEC doesn't have enough spare capacity to deal with it all. The producers will have to invest, and the producers worldwide, not just the US, have not invested enough. What degree do I need to work with trading? Do you mean like to become an institutional trader? So if you want to become an institutional trader, the way to go these days is going to be something to do with quantitative finance, right? So there are some places that have really solid quantitative finance degrees, and you're going to want to go to a big school. You're going to want to go to a, like University of Chicago or um, the schools in New York, the places that have really solid finance programs that the firms recruit people from. But the traders that I spoke to at the institution, they were block traders, and so they had learned about market microstructure in school with graduate programs. Why are you talking about China? No, we're talking about the problems with technical analysis. That was more fun. Anyways, so really, it's the high volatility regimes that I think really show you how technical analysis doesn't really work, right? Because during calm times, what will happen is everybody will chance upon a strategy that seems to work, and they felt it fools them. The market's really good at fooling you that you found something that works. Now, there are things that are consistent, right? And those are the things that I talk about in the stylized behavior of markets video. Okay. One of them is that when you have a really strong move down, a liquidity hole will form behind that move and suck it back up. Right? It's a very empirical, consistent behavior of markets that you will see over and over and over and over again. Anytime that you get a really big move, there's like a really massive pullback. Now, you all know that trying to trade that is a little bit more complicated than that, right? Because it might pull back and then you get it there and then it decides to pull back all the way, or it actually reverses the other direction and you're wrong about which way. So it's kind of hard to take advantage of these stylized behaviors, but there are stylized behaviors that, based on the structure of the market, happen and are therefore consistent. And they're absolutely nothing like what the technical analysis people tell you. And you can't treat it like technical analysis, but I would call it quantitative analysis. And there are kind of some behaviors that can help you a little bit with your picking your spots, right? What you probably want is a neural network learning profitable short-term strategies, and will have constantly find new ones. Well, I think that a system like that is conceptually feasible, but when you try and game that out, I think in the end it doesn't work, right? Because there, for a long time, my understanding is, I don't know this directly, but some people in the industry on LinkedIn I've seen them make comments to this effect. Igor Halprin in particular, who's like the big quant at Fidelity, says that there was a time period where there was a lot of generational algorithms that were dominant in the market. So what they would do is, at night, they would look at the market data and they would run all of these they would have a strategy, and then they would make a bunch of different variations of the strategy and see which ones did best, and then that was the one that worked the next day. And so it was constantly adjusting to what the market was doing, and for a while they were very successful with it, and then it stopped working. And so what I think probably happened was all of those generational algorithms kind of started to find they would find the edge too quickly. So then the game would be, what are the robots going to do and trade against them? But then you would think that all of the people doing that would realize that, and then they would try and do that too. And so then whatever kind of pattern you might have been able to game out of the metagame surrounding which technical strategies might start working next, eventually there will be enough noise in that kind of trading just doesn't become profitable. And then again, just like everything else, high volatility regime comes through, none of that stuff works, they lose a ton of money and they stop trading it, right? And that's what always seems to happen, right? So market making can be profitable if you are hedging yourself and you have you're relying on real structural inefficiencies and you're fast, right? And there's only so much room in the market for a person to do that. And apparently right now in the treasury market, there's only enough room for 1,500 contracts per price. That it is what it is. Advantage that we have is that we're small and fast. Yes, that is true. Because if we know that a large meta order is coming through, we can front run it. The hard part on that one is knowing that a large meta order is going to come through. But because if you know how those large meta orders are executed, that kind of helps, right? Because you know what it looks like, right? Yeah, with this one, we're getting decent pullback. I wouldn't say that the degree of pullback here in the 10-year is super great. Like at 16, if we got to 16 and maybe like 2.99, maybe I'd be more interested in taking it. Because I think there's a pretty good chance, could be wrong, but I think that there's a pretty good chance that we could get a trend day today, right? Let's see here. This side, 10-year at 4% in the talks. So far, it's a no-brainer. Even your bonds are slowly sinking. I'm more concerned by this summer. It's hard to get a clear picture. Could we see a strong correction? Position closed. Too many people having the same strategy. You just saw dust floating around, or was that like a mosquito of some sort? Well, I don't see anything flying off of me. Good morning, D. How are you? How do traders get paid on institutional banks? Do they still get paid if they lose a lot of money? Well, they do have a salary, but they do get paid on a performance basis. But the thing that you've got to remember is that the institutional banks, well, at least in block trading, for instance, in block trading, because that's probably like, here's the thing you got to remember is that the prop desks at banks are gone, right? A prop desk at a bank, it was probably the best analog for what we do, right? Now, probably the best analog for what we do would be block trading hedge funds. Or there are hedge funds that try and front run block trades, and that's what I do essentially. Or just speculators, right? But the prop desks are gone. But the block trading desks, I think those are the people at the banks that probably have the most relevance to us, or at least have the information that I think is the most interesting. And the thing that you got to remember with them is that they know what's going to happen, right? The way that all works is they have the current market information, the current liquidity, and so their client comes in and says, we need to sell X amount of this. And then they can say, okay, well, if they sold X amount of this at the current market price, that's going to move it this far. So, and we need to make a little bit of money off of that. So we're going to quote them this price, right? So, of course, it doesn't always work out because there could be some insane mondo move against them that screws the trade up or something. But generally speaking, because they know the empirical properties of the market, they tend to make money because, they're basically able to set things before anything even happens, right? So, on the whole, a block trader is going to make money, right? And it really is a question of how much more money do they make than what they're expected to, right? So, but it's all a bonus. It's a bonus that comes in at the beginning of the year. Good indicator to keep an eye on is when they start hiring people. Then it is because there is a little to sell. So, there's this I think the big story today is Elon Musk is concerned about the economy, has a feeling about the economy, and wants to reduce his workforce 10%. Okay. Well, with the latest market data that we've gotten this past week, the market is still suggesting to me that there could be a tough road ahead of us, but that it's unlikely to result in a recession. Instead, what's going to happen is all of the weak players that have been making the fools that have been making money are going to get shaken out of the market is what's going to happen. We haven't seen anybody collapse yet, but I think that we could see that this summer. So I'm expecting to see like lots of volatility, but not a recession, right? Lots of volatility and the economy actually overall weathering it surprisingly well. Except for then you have Elon Musk comes in and he says, I got a feeling about the market. Well, I don't think that he is any better than any other economist at predicting what the market is going to do. But him coming out and saying that is going to have a significant impact on the market sentiment, right? So that could be a problem. Elon Musk being bearish could in and of itself be a headwind for the economy that kind of becomes a self-fulfilling prophecy. You know what I mean? Him saying that is a little concerning to me. Now, why would he say that? Well, here's my theory, Roland. I think that Elon is over-leveraged. Like, he became the richest person in the world. I don't think that you become the richest person in the world that quickly without having taken on a little bit of margin. You know what I mean? And so he knows that if there's going to be a haircut, he has to be one of the first to cut down. And that's where you get, reduce the workforce by 10%. Say if you want to work from home, go work somewhere else. 'Cause you want people to quit. He wants people to quit. Right? Because he's over leveraged. And so he needs to tighten the belt as quickly as possible. That's probably what's going on there. But it's also probably that he does have a feeling that he probably does have a feeling that the economy is going to go into a recession, and he probably overestimates his market prediction prowess, right? So, but the question remains, okay, so if the economy is actually doing pretty okay, but then market sentiment continues to tumble, where does that leave us? How dare you question Elon's genius? I don't think any of them like okay, so another example. Yes, was it yesterday that no, it was Wednesday that Jamie Dimon came out and said there's a storm coming, and the market really reacted to him. So I don't know what's with that, but all of a sudden the market has been reacting to what Jamie Dimon says. And you know what? Jamie Dimon is a smart guy. I really respect him. I really felt that the right decision would have been to have made Jamie Dimon the president of the Federal Reserve. I think that he would have done a better job. I think Jerome Powell is good, but he's not the what do you call it? He's not the savvy shark that Jamie Dimon is. And I think that Jamie Dimon would have been well ahead of all of this stuff. Like maybe he would have been, okay, yeah, we need to be careful because of these further waves of the virus and everything could have an impact on the economy. So maybe he too would have been careful about, all right, we don't really want to raise interest rates too fast. But then after that, I think that he would have been much more aggressive. Because the issue is that we're having is that the Federal Reserve always ends up being more reactive and more timid than they maybe should be. That's because of the degree of impact that they have, you don't want to get it wrong, right? But I think that somebody like Jamie Dimon would probably be a little bit more willing to take on the risk and try and get in front of something, right? But does Jamie Dimon know that there's a recession coming? Oh, maybe. I mean, he's smart, so maybe he does. but maybe he doesn't. Like, there's kind of this whole thing that, like, actually, no one single person can really actually know and be that good at knowing, because otherwise there wouldn't be a market. Like, if there's this one person that was that good at predicting short term and midterm that consistently what the economy is going to do, we wouldn't need the market anymore. We could just put them in charge of all prices, and then we'd always know what's going to happen, right? So the entire idea that there's, well, if Jamie Dimon says it is going to do it, then we should follow along with that. Maybe on average you might do, after you do that 1,000 times, you might do okay, but on any one instance, probably random. So you got all of these people on like Reddit and stuff, and they're saying, well, Jamie Dimon must be saying that because he wants to buy more, right? Which just reflects what their own ideology is. I don't think that the way to trade is to watch what somebody else says and just go along with what they're saying, right? I think for the time frame that we're trading, the way to trade is look for a piece of information that effectively predicts future orders. I think you got one today. As soon as that piece of news come out, yeah, you could have known that you could have bought interest rates here. And I don't know. Should I be proud of myself that I stuck to not taking a trade today? Probably could have taken a trade and made money. Oh well. But yeah, that was something very predictive, right? For how long that ends up being predictive and how many more orders could come through here today, that's hard to say. But we're only down about 10,000 contracts, so there's plenty of room for it to go further today. Jamie is QAnon confirmed. That's just that whole thing is a scam, you realize, right? Well, I was relieved when the QAnon people shut up after Donald Trump they made all sorts of predictions for Inauguration Day and after that, and they were like all wrong. And after that happened, I think most of QAnon just disappeared because it was finally shown that it was just nonsense. Oh, I've never responded here to what Alligator was saying. This side 10-year at 4% in the talks. The NSA trolled us, man. No, it was a bunch of kids posting on 9chan that made it up. This is the one that I don't get about the QAnon thing, is that the people that made the initial posts literally came out and said, "Yeah, we did it," and people tried to ignore or hide it. No, like the guys came out and said, "Yeah, we did it," and they had screenshots of like all of the conversations planning it and everything. And I think that a large part of what happened after that was just the founder of 9chan, or whichever chan it was, the founder of that pushing it because it was getting them traffic. Pretty messed up, right? But I don't know. It's really interesting to me how susceptible large populations are to conspiracy theories. So I always came to this, was on the side of, well, that's just people, because there was a lot of people that said, well, Republicans are just so gullible, right? But ever since Biden's been put in office and the tables kind of turn, and all of a sudden Democrats are coming up with all of these conspiracy theories, like that the corporations are all conspiring to be more greedy here at this particular junction because they don't like Biden or something. Sometimes it's better to not take a trade. Well, I felt like that the stress of taking a trade is not worth it when I'm supposedly supposed to have the baby today. So like, you know what happened yesterday? So I asked my wife, okay, so when are we supposed to go to the hospital? Because they're going to induce her a week early, right? And she's like, well, they're going to call and tell us when. Okay. Well, apparently what I did not understand when she said that. Apparently what I did not understand when she said that is that they're going to call when they have an opening for her and then she's supposed to come, right? And that was supposed to happen yesterday. They said, well, we're pretty busy, but we should be able to fit you in. And if we don't call you before like 9:30 at night, then it's not happening that day. And then we'll do the next day, right? So they didn't call her. Yeah, so I wanted to go and see Top Gun yesterday. I'm like, let's go see Top Gun with your dad. And she's like, no, because they might call me. And I'm like, what? That's how I found out, right? So we didn't go and see Top Gun. We watched the end of the Tournament of Power on Dragon Ball Z instead, which was awesome, by the way. Oh my gosh. That was so, listen, Dragon Ball Z is I love it. It's so dumb. Like the formula, they got this formula and they've got it down and they just hit that one note over and over and over again and it works and I love it. And it bothers me that I love it, but that is the way that people are, guys. It's about the combination of norepinephrine and serotonin, right? So you want to do something consistently. Like Star Wars, this is the problem with Star Wars. They don't get this. Okay, all of the people that come in with Star Wars, they come in and they say, oh, okay, let's take it somewhere new, right? And they change so much that the Star Wars fans don't get the serotonin. And so it doesn't work, right? Like what you want to do is you want to do something consistent, but then change it just enough that it gets the dopamine release, right? For instance, Obi-Wan, he says hello there in the original sequel series. So then in the second one, he drops in on somebody and says hello there. So, right, it's the same formula, but it's just a little bit different. You get the norepinephrine and the serotonin, right? That's what it's all about. And so Dragon Ball, they've got the formula and they continue to hit the note. And so it creates the serotonin. And that's why we enjoy watching it, even though we all actively understand how like stupid and overdrawn it is. Like how they draw the fights out and all of this sort of stuff. But anyways, and there's this point at the end of it where the bad guy like almost hurts his friends and Goku's like, well, I'm no champion of justice or anything like that, but if you try and hurt my friends, like I'm not going to allow that. And he gets pissed and then it's just like, oh, it was the animation in that point. It was like they spent the whole animation budget on that one thing and it was great. So that's what we watched last night, right? And then supposedly they could call her as early as 5, but obviously that hasn't happened yet. So I think that we will finish out the stream today before they call us. We'll go in. But that's why I didn't take a trade. Was because we're supposed to go to the hospital today. And I said, well, the last thing that I want is to be sour over a trade or something. I've done that before. Even though I think today it probably could have gotten a pretty solid trade, right? But the problem is that there were definitely points where I might have taken it there at 07. I don't remember what was happening. I was paying enough attention, but it might have gotten 10 ticks against me first and I'd gotten out. So it was probably better that I didn't take a trade. Because not only would that ruin my whole day, but the anticipation of the event may also affect my decision making, right? So instead, I can come in and say I'm not going to take a trade and just analyze the market and look like a genius because I didn't actually have to take a trade. Obviously, we all knew that it was going to go down, right? Actually, I mean, I did manage the trade. Like, listen, what do you guys think about the way that I did this? I had some on, I think I took them off at 245, right? And then I only had one contract on during the news. And then when it came down to, where was it? I think it came down to 17 and bounced and it came back to my entry. I added 4 more and I took them off at 16. And then I've been letting the 2 right here. And then I think that before I leave, I will take one off so that I only have one contract on for the weekend. Yeah, I think that on my my swing trade CTA strategy, I did pretty freaking good. Now I've taken other trades here in the 10-year with this. That's maybe not. Actually, let's go. Maybe we should go look at this. Let's go look at this. Because I think I did take a couple where there were some bad losses in some points. And I don't remember if there was one that was like so outsized because I was being dumb that it like would make my stats useless or not. It will most likely make some noise today, up and down. Yeah, well, I think it's going to be really interesting here in 5 minutes when the S&P 500 gets going again, because we had a really strong rally yesterday for really no apparent reason. So, how is the market going to react if we open up and they decide to sell and they get below 4,100 again? You know, are you going to name the baby pork chop? No. You know what? We spent a lot of time thinking about the name last time, and this time we haven't really thought about it. So that's probably going to be the discussion today, is what the name is going to be. ZN. And I think that I can do it. Oh, no, that's not right. So let's just try going to the beginning of the year. Or actually, let's go to December. Maybe that'll help. Oh, no, wait. June. Apply. Oh, okay, yeah, so I did. I had like a $10,000 winner, but then I had a $5,000 loser and another loser, and now we're back up to the 10,000. So there's not enough, probably not enough trade data in that for me to really say, oh, look at how good my CTA strategy is. Because there's still... Well, now that's super interesting, though. So I'm not sure why the MFE is only 12, because some of these I like held really, really long. There must be... Oh, I think that there was a lot of little one tickers here and there that were bad, but... Goku. Well, that Goku is what we named the dog, right? So, dude, we're watching this and we're talking about the show, and the dog is like, what? What? Goku, what? No, what? Why are they talking about me on the television? Let's see here. Let's just come and check out if there's anything interesting going on. Oh, Tom Dante uses edge clear. That's cool. I don't really know anything about him. I've been hearing people talk about him. I'm like, who? Read it, save it, remember it, repeat it. Higher interest rates and/or quantitative tightening is only a problem for equities in a slowing economic environment. The U.S. economy is still steaming along. Don't get caught chasing false narratives. I agree with them. I mean, I think that you're going to see periods like today where the market sells. Like, I don't think that I just want to buy equities per se. Like, it's going to be a volatile market, but I don't buy this narrative that higher interest rates guarantees a recession. It's possible, but at the moment, it still seems like the recession is the less likely possibility. Well, now that they're back to 2.99, I'm kind of tempted to take one again. Especially like right before the open. I'm not going to. But let's just kind of track. Okay. So if I took 2.99 there, is there an adverse excursion against me? How much would it go against me? That's what I want to try and see here. Liechtenstein should build a nuclear power plant and sell energy to Germany since Berlin is incapable of rational thought. That sounds like a great idea, actually. Maybe I can get in on that one. Jeffrey Gunlock, the Eurozone Producer Price Index has increased over 37.2% over the past 12 months. The ECB must pivot more hawkishly to have any credibility. Oh man, and then there's this is what I was reading just before I went to bed. Anthony Crudelli, to say we learn from every loser is nonsense. Not every loss is a learning lesson. Sometimes you're just wrong and we have to learn to deal with that. That's said like a real trader. Man. You know what? Something that I always find really interesting is that you can really tell who's really trading and who's not. So Anthony Crudelli is definitely a real trader. I don't know how actively he's trading right now, but that's a man that's traded in his life, man. He knows what it's like. Another one is Kevin Davey. Is that his last name, Davey? He goes by Kevin Dog on the Futures IO forum. In every post that he makes, it's like when he wins something out about like a strategy that's proposed or whatever, it's always exactly like what I've seen in my own results. It's like, you know that he really is like testing this stuff. And we were talking about this thing where people will create robots and they'll use non-time based bars. And there's a lot of issues with non-time based bars. They kind of they create certain biases that will really trick you and make you think that they work really well when you're backtesting them. But then when you actually go and okay, so there you go. I would have gotten 10 ticks adverse excursion on that, right? So what about now 2.98? Anyways, so you'll do the backtest, you'll think it works, but then as soon as you start trading it on, live data, it'll do terrible. And so there's these market vendors that have been out there that have kind of been selling systems like this. And it's like, how do they not know? Like, do they not know that it's, but I actually do think it is the case that they're just lying. I think that they're telling these people to do it on these exotic bars because they know that the back test that it will give them is better, even though the strategy doesn't really work live. And they're just doing that to get people to buy it. Bothers me so much. What's your favorite track? I don't think about it from those. Actually, no, I do. I really like Vegeta, man. I've enjoyed the character evolution of Vegeta. I enjoy watching that guy, yeah. What? Isn't that classic Tobias? He tried to fix his a typo there. What you favorite dragon? And but then he said Yapur. What Yapur favorite Dragon Ball character? Yes, exactly. My favorite is when he's like, there's no way. How can Kakarot be so powerful? It should be me. I'm the Saiyan Prince. I love it. It's good. Yeah, and Piccolo. But you know what? So you know what I think is the most interesting part of Dragon Ball Z? Like the thing that I think is unique about the show and that I haven't seen in any other show, and they actually do point something out about it in the end of the story that I'm watching right now, the Tournament of Power, that all of a sudden it was like, oh, they did that on purpose. Is that like the villains will very often join Goku after they're defeated, right? The one exception to that was Frieza. And even Frieza kind of joined them in the Tournament of Power. And then in the video game, Frieza, not only Frieza, but they also brought back Cell. And they were all fighting together, even though they still hated each other, just like they had done with Vegeta. But the whole thing is I guess is what they were, or what they say in the Tournament of Power, is that the villains are inspired by him, and that's why they join him, is that he is a unifying force. I find that so interesting. Like the whole thing that like when you meet Vegeta, it's like, oh, like you really, really hate this guy. Like he was such a good villain in the original Saiyan saga, and then ever after that, he was an ally to Goku, and they get closer and closer as the series go along, and then all of a sudden, he's everybody's favorite character, and like people like Vegeta more than Goku. Like, what show has pulled something like that? It's so cool, and it really is kind of like an interesting, like the villains end up joining Goku for the same reason that we like him, you know? And it is kind, I think it is a good lesson for life, is that like the people that are successful are the people that have the most value, are the people that make everybody around them more valuable, right? Like that's where this, because listen guys, I am not the best. I just, my personal opinion is I am not the best, most successful trader here at this moment, right? Like there are people that are in this chat that trade way better than me and have had way more success than me. It's like some of these guys in this channel, it's insane. It's like, I can't believe that this person that knows so much is, enjoys my channel and comes in and, listens and enjoys talking to me. It's like this huge privilege, right? But like, that's the whole thing, is that what makes this channel valuable? It's not that I'm so great and that I defeat everybody around me and, push. No, it's that if you're here every day, you become a better trader, because the combination of us all together, we all make each other better. And that's what makes it have value. Everybody thinks you start out, you just want attention, right? Just want somebody to pay attention to you. Then nobody pays attention to you. So what do? You start trying to get the attention by dragging other people down. And then people just hate you, and it's just like this constant battle. And this happens a lot in the trading space, right? But when you get to this point where you realize, no, the value is you make everybody around you better, right? You rise above all of that. You gotta be Goku. You gotta be the one that you help everybody around you. They're better because of you, right? And it's just this feedback loop. And Vegeta has the hotter wife. The thing is I've never seen the original Dragon Ball series, so I don't understand the whole Bulma thing. Apparently, people that watched the original Dragon Ball series had a real hard on for Bulma, but I don't get it. Anyways, there are some people that, and listen, I'm a very disagreeable person, so it's not like I'm perfect about this all the time, right? But the stream is just, kind of naturally creates that dynamic. It's really cool. Oh, what movie are we talking about here now? Matt Walsh was talking about a movie. He's like, none of the critics watched it, but I'm like, what movie? What movie? What movie are you talking about? Oh, What is a Woman documentary. Okay, never mind. Something I haven't heard of before. Value through the community. Yeah, exactly, man. It's just it's constantly surprising to me. It's so weird. The way that we as humans are is so weird, because you can be like really, really successful and still have this feeling like you're inadequate or you're not enough, or that what you've done is not enough, or, frustrated that you're not having the success that you want. Right. And I very much fall into that category. It's not, I'm not talking about imposter syndrome per se. I'm not so sure that imposter syndrome, the imposter syndrome in the futures trading space is a little bit different, because the thing that you're going to get into is you might become a successful trader and you feel like you're not really a successful trader, but the reality is that everybody in the retail futures trading space, is pretty lowly. You know what I mean? So never feel like uh you're not enough, because the reality is that if you've just been around long enough, that's like an incredible achievement, right? We've been around for 5 years. That's an incredible achievement, right? But what I do is I come in and I'm like, well, I would really like the channel to be like 15,000 subscribers strong, right? Like I'd like the number of subscribers to be twice what it is. And what do I got to do to make better videos and be more consistent? I have a really hard time being consistent with the baby and everything else that I got going on in my life. So I don't put out a video every week. I think that we would probably be doing a lot better if we put a video out every week, right? So I feel really bad about that, and like the channel should be more successful than it is. But then at the same time, when you really look at the numbers and what we've done and so forth, what we've done on this channel is really uh really quite remarkable, that we've been around for as long as we have, and that the channel has grown as much as we have. And even though I still have rough spots with my performance, and the trading is not what I would like it to be, we've made a lot of progress on that as well, so it's like you'll always you'll always feel disappointed and inadequate regardless of how much success you have. It's kind of funny. So I've started to, it used to be, I always got, especially in 2020, man. Ugh. In 2020, I would get so many people would email me wanting me to promote cryptocurrency services and stuff like that. It's crypto, guys. I literally turn down people looking to do like sponsored videos on cryptocurrency stuff every week. I'm not even kidding. But now, like more recently, I've been getting inquiries from people that like I'm really interested in working with. So that's super exciting to me. But in trading industry, it's also because a lot of people give up so fast, and attracting new people is super difficult, I suppose. Yeah, well, I think it's a little bit more complicated than that. So a lot of people do give up quickly. I think, well, the stat is 80% of people give up before 5 years, right? 80% of people give up before 5 years, but I think that more than half give up before 2 years, right? So there's kind of a tail on it. And most people give up at the beginning, because I think that a lot of people come in and think, I'm going to come in and trade and I'm going to be this market genius and figure it out and make all of the money. And they don't realize that the market is more statistically efficient than it is informationally efficient. So knowing what's actually going on in the market, that's your first problem, is that if you're going to trade discretionarily, you really want to know what's going on in the market. That's like the whole edge. So they don't do that. But then being the informed trader, knowing what's going on in the market, is a lot of work. I'm not going to say that you can't do it. Like I think if you put the time in and you read the news and you come in, you talk to people in Discord and you hear what we're talking about here on the stream, you're going to be pretty informed, and you should have a pretty good idea of what flows might come in that day and so on and so forth, right? But it's work. It's a lot of work, more work than most people expect, because like the reality of it is, I think that you basically end up structuring your entire life around futures trading, right? So that kills a lot of people, right? But I think that the other problem that Tobias didn't bring up is that when you're talking about attracting new people, is that if you are a vendor, it's super competitive, you know? And when I say vendor, I'm really thinking more like a brokerage. Okay, so like if you're a broker, how do you attract people over, like AMP Futures is the most popular futures broker, I think, right? And they have the cheapest commissions. And guess what? Like that's what people care about. How do you compete with that? Well, I think that a lot of the introducing brokers are realizing that the platforms are a big thing that can give you a leg up. That's true. But the platforms are really competitive too. There's a lot of really good platforms in futures trading. So how do you get that edge? I don't envy the people that are FCMs. You know, what they do is hard. It's kind of weird because a lot of the people that end up becoming like the introducing brokers, I don't know how they get into it because they're not like a lot of them, the way that they talk, when I talk with them, it kind of almost sounds to me like they just sort of stumbled into it. Like they weren't like me. They were like, oh, I want to become a trader. And they end up loving futures so much that they work really, really hard and they become the futures broker. And no, it's not like that. It's just like, oh, well, they saw the opportunity and so they took it. This is like, okay. But it's hard. It's a hard business. Oh man, my mouth is getting super dry. I know. Everybody's lying about trading gains. Well, I think that the problem is with that one is that performance is a difficult thing to measure, right? That's why, like, whenever somebody comes into the room and they say, "Hey, Seth, are you profitable?" and I say, "Sometimes," right? Because it really hits home the whole thing that like, it really depends on how you measure things, right? Because I could come through and I could just say, well, yeah, over the last week I'm profitable. Over the last 2 weeks I'm profitable, right? But how am I over the last 5 years? Well, if you look at it over the last 5 years and you look at the sum of my trading, not just the futures trading, I'm pretty sure that it comes out to positive. I haven't like sat down and done the math, and I really don't care to, but I think it's slightly positive. The futures trading in general is usually a loser for me, although it's getting a lot better. Right now, I'm generally break even, except for the data fees. The data fees are the things that's been drawing down my accounts. So I'm a lot better than it was, but it's not amazing, right? Well, but let's just say that I was making money. Like, let's just say that over the last 12 months, the aggregate of my trading in the 10-year treasury was positive. Okay. Is that enough? Is that you say, okay, now you're a profitable trader? You can forever turn around and tell everybody you're a profitable trader and they should all listen to everything that you say because you're one of those people that made it. And no, it's not, because number one, past performance is not indicative of future results. So it could be that I had one really good year and then the next year I'm just going to blow it all, right? That happens a lot. In fact, if somebody has been successful for a year or two, there's a pretty good chance that they're not going to be very successful the next year. But then another thing is that maybe the results aren't actually that good. Like, what was the net? Okay, so for instance, I could come in and I could have, before this news hit, could have said, I think that the news is going to be pretty okay and that interest rates will continue to rise, and taken it with 4 or 5 contracts. And well, let's say 3 contracts. I could have gone in and taken it with 3 contracts and be up like $200-300 or whatever. Or maybe I had held it all week and I could be up like $3,000. Okay. And uh, then I would be able to say, oh, I'm profitable, right? But is that actually the strategy that you want to trade? No, because all of the profits came from like one trade, right? And maybe I just got lucky on that one trade, right? So performance is a complicated thing to measure, right? There's your overall net gains, which is what most beginner traders think about, but then there is over what time period. There's all of these traders out there say, "Oh, I'm a successful trader," and they'll show you like 6 months worth of data, and it's like, okay, yeah, but what happened over 5 years? Because if you're going to start a fund, they're going to want to know your 5-year history, right? What is it in risk adjusted percentages? Like, what is your Sharpe ratio? That matters too. How consistent actually is it? Are the results like you consistently make a certain amount every day and it's incredibly consistent, or is it all from like one trade? What is the drawdown that you get when you're not doing very well? Like, these are all things that matter to the performance, right? That people, they don't think about asking, but if you were gonna copy somebody's strategy, don't you think you should know those things? Yeah. So not a lot of traders have a 5-year. Yeah, I mean, just the fact that I've been doing this for 5 years is like, yeah, more than 80% of people. I've been doing it more than 8 years because I've been very involved in markets before that too. This is just when I really started trading with the DOM the last 5 years. Yeah. So, you know, I really wish that the community would get away from this profitable trading mentality is what I would call it. Is this idea that there's some point at which you reach in which you are a profitable trader, and then from then on you are likely to continue being successful. And we should go and find those people that have reached that point and emulate them, because that's what I am always hearing. And that's not the way that it works. This is not the way that it works. Past performance is not indicative of future results. The way that somebody else trades may not be appropriate for you. You don't have the same risk profile as them. You don't have the same mind as them. You don't have the same resources and access to information as them, right? So you don't want to do that. No, what you should do though is you should find things that you can prove are actually a thing, right? Like, you go and you do your research, and based on your needs and your risk profile, you could say, oh, okay, this is a thing that seems like it might be useful for me. And then you would want to find evidence that shows you how that thing performs on all of those different metrics, right? And you would want like the hard numbers, right? So don't trust gurus, trust experts, right? That's where we need to go. I hate the focus on the performance, because what it basically does is it leads everybody to chase phantoms. What happens is all of the retail traders go after whatever the trendy thing is that it seems like people had made money off of recently, and they all go down the same rabbit hole, and then it stops working and they all blow up, right? And then what happens is they ignore that, or sorry, they chase that at the expense of the things that would really actually help them, like learning market microstructure and quantitative finance, right? Does your broker ever? No, I've never gotten any kind of email like that. The rules with futures trading brokers are like incredibly strict. I wish it was more like stock trading, in that your futures broker could then try and help you out a bit more, right? Try and give you more information. Okay, now we're at 2.97 and I'm still not, right? If I had tried taking any longs off of this big thing coming back, I would be very unhappy. So, well, what time is it? It's only 8 o'clock. We still have a whole hour, man. Nobody's woken up. It's summer. None of the kids have woken up. funny. We did kind of have them up a little bit later than normal though. Alligator says it seems we've all come to the same conclusion. Systematic trading is a worthless pursuit without informational edge. I think so. Look, I would really listen. I'm a programmer. I've backtested a lot of things. I've found a lot of cool things. I have not found this systematic edge that makes money year after year after year. I'm sorry. Maybe you're smarter than me, but not to be cocky, but I'm pretty fucking smart. I'm pretty fucking smart. I haven't found it. So maybe it's better to just know what's happening, right? I think that's a much easier way to go than trying to be Einstein. Mm. Actually, I'm gonna put that in the Discord. How would you personally optimize strictness to be less like that and be more accessible instead? Oh, that's a good question. Well, I just think that futures trading brokers. I'm not exactly sure what the rules are in regards to it, but I think that they should be able to provide you research. Essentially, that's what I want. Is I want more research from my broker. Like I go to Zero Hedge, okay, and I'll read these. Like they often share research reports from Nomura and so forth, right? Like that's really what I want. Is I want a futures broker that gives me access to some of this institutional research that you wouldn't otherwise have access to. Right. That's where I feel like that a futures broker could potentially help you out. And I'm not sure exactly what the rule is that kind of prevents them from doing that, but it's just like it's really strict with futures brokers. ES is recovering yeah, a little bit. So we got some big numbers coming up here, right? We got US ISM. So we could get these non-manufacturing prices paid. If those are bad, this could we could have another big move, right? 40 seconds. It's a lot of shorts, yeah. That's really cool. Octavius posted a chart in there showing longs and shorts. I think that he's using the COT data, but it's just a cool looking chart. Oh. Okay, so that's really weird. So I'm seeing non-manufacturing PMI 55.9 versus an expected 56.5. I haven't gotten like the prices paid in new orders, but like there was a very, very large order that showed up and pushed the market up, even though the release that I'm seeing so far doesn't seem too far out of whack. Let's see here. Fed's Brainerd will be speaking earlier. What you said earlier will be a good title for today's stream. I am pretty effing smart. Like I don't think that it's an egotistical thing. Like people always say, listen, when somebody says that they're really smart, they probably aren't. I do not believe that I have a super above average IQ. If I do have an above average IQ, it's going to be like 110 or something like that, right? But the whole point here is that the being super smart is not the way, right? The way is just understanding what's really going on. How does the market actually move, and what are the things that are going to induce people to trade, right? That's what matters, and you don't have to be Einstein to figure that stuff out, right? And really, the more humble you are about it, the better you are at being able to tell when you don't really know, and being selective about when you do really know. That's the thing that's going to be the difference. You know, I think I'm too smart, so I will end up taking these risks when I really shouldn't. Is really, I think, the bigger problem, right? It's like knowing that you don't really have the edge in that situation. That's hard. That's really hard, right? Now, if you're getting into quantitative finance, then how smart you are really, really matters, right? And that's kind of the other problem, is that I know a lot about algorithmic trading, how to set up a robot in NinjaTrader and all that sort of stuff. But I am nowhere near what these people that do this at the institutions are. So there's you're gotta be. It's a long road. If you're a kid and you don't have a day job, then maybe you can get to that level. But that's the amount of work that's kind of required. That would be required to get there. You'd have to be a student, right? So you can spend that much time studying because it's that complicated. It's very sophisticated math. I know just enough to know that I don't know how to do that stuff yet. I know that it exists, but I can't do it myself. I tell you what, here's something. I give you a little secret, okay? So the day trading community is on LinkedIn, okay? Sorry, let me start over. I said that wrong. The day trading community is on Twitter, okay? Like all the futures traders and the retail day traders, they're on Twitter, okay? Like you want to talk to Futures Trader 71 or they're on Twitter, right? Okay. But the people in the industry that are really getting paid the big bucks to do this sort of stuff, they are basically not allowed to have Twitter accounts. Okay. They're not allowed to get super interactive and have a YouTube channel where they post a lot of stuff. I noticed there was this guy that was really popular for a while. What was his name? Like Coding Jesus or something like that. I was kind of suspected that he was working for. He never said who he was working for, but based on the edges that he was talking about, it kind of sounded to me like he worked for Citadel. And I don't think he's posted a video in like 9 months. I'm pretty sure that what happened was his place of employment said, you're getting big enough and it's disruptive enough. We need you to stop. Okay. Like these people, they're just not allowed to be on the social media. But you know what they are allowed to do? They're allowed to be on LinkedIn. So that's what you want to do, is go on LinkedIn, and like when you read a research study, add the people that added the study on LinkedIn. And then LinkedIn is so cool because it will say, okay, your friend liked this thing. So it actually shows you what your friends liked. So now you get to see the things that they were seeing, and that's where you get some of the best stuff, man. Telling you. LinkedIn is really the place to be for traders. Even though, for the day traders, it seems like it's Twitter. But if you want all the quant stuff, oh man, there's crazy stuff these guys talk about on LinkedIn. I can't prove it, but Renaissance edge has to be that they are pushing the book around. They for sure have the capital. No. Because remember that because of the square root law of meta order impact, you can't make money just from the book. You can't make money just from your execution impact. Because what happens is if you take a move that moves the market, your impact will tend to be like this. And there's a point of which maximum impact, and then you can put a lot of volume into this area so that they will actually come in and create that hole so that they can put a lot of orders into it. And that's how they can kind of get filled without pushing the market up too much, right? But if you then, somebody comes in and sells, once you're done, there's this post meta order impact. And then if somebody else comes in and sells against you, the impact will be higher than this. It'll be like that, right? So on net, you'll lose money when you get out because your average price will be there and your average exit will be there. You lose money. So you can't make money just from your impact. So if we were to talk about Renaissance, one of the key things for Renaissance that we know they do is that they know how to size their positions appropriately. So what they kind of do is they know based on correlations and other things. I think that correlations do have a lot to do with it because they are doing some like statistical arbitrage stuff. Is they know that price is going to be here, that like fair value is going to be here, and that there's going to be people that are willing to buy it here. And they know how many orders it will take to get it there. And so they know how to size the trade exactly to get it, and then it gets to that point, and then other people come in and buy it and they get out. So their edge is not that their impact. It's the opposite. That their edge is they know exactly how much to trade, and they know exactly what it really should be worth or where it's going to go to. I saw an interview where the average trade is approximately 2 days. That would make sense. Because I think that a lot of what they're doing is they're just coming in and they're finding these situations where they can predict the orders really effectively. And it seems to me that for the amount of risk. So one of the issues that I think we have is that for the amount of risk that we want to put on, scalping and market making kind of strategies are really more appropriate for what we as retail traders want to do. But there's too much competition for those edges from the robots. And so the actual opportunities that are available to you are really more suitable for a different risk profile. The strategies that are really available to us are really more suitable for somebody that has like a $50,000 account and is okay with losing $1,000 in a day. Right? So that you can swing them, essentially. Because then you can come in and you can be like, oh yeah, interest rates are going to rise, and you could have been short like 2.7 you could have been long yields from 2.7 and just be writing this and be up $300 per contract by now. By the way, I never got the prices paid number. Oh, okay. Prices paid 82.1 versus previous 84.6. I don't know. That was it was a little weird, the big order that we saw come out when the treasuries happened, but maybe it was a spoof. I don't know. Maybe somebody was just trying to trick the market into buying because they still needed to sell some or something like that. So it was a weird kind of move. Actually, how much was it? We shouldn't be able to see that. No, not that one. That one. That was the 2,000 lot. No, it was an 8,000 lot. There was an 8,000 lot bid at 118.20. Jeez. Hey, NASDAQ killer, how are you? You missed all of the, well, I mean, you missed everything, but it's a pretty big non-farms today. Most of the time price goes one day and the news goes, well, I wouldn't say that. I would say, you guys remember that period where it was like, okay, here's the news and here's what I would have expected it to have done off of the news, and then it doesn't do that at all. And we're like, what's going on? And it did that many Fridays in a row, and we're just like really confused. I haven't had that happen to me in a while. I don't think that's happened in like 6 months. That was like more of a third quarter of last year sort of a thing, where it was like I was really perplexed a lot of the time on the really big news events. But this year, it's been, I haven't been a real surprise. In fact, the market rally in the S&P 500 yesterday was probably the most confusing move I've seen in about 6 months. I'm really not sure why it did that. There must be a really powerful passive buying force in the market moving things up, because that didn't seem to be related to any fundamentals to me. Have you found any edge in the knob? Dude, I really wish that I had better tools to be able to analyze the knob. I mean, I guess we kind of do, but it's kind of hard. So here's the one thing that I do know is that there is more mean reversion forces in treasuries than there are in equity markets, and that's especially true of spreads. And beyond that, I'm not sure. It seems to me that there should be some statistical properties about spreads that we might be able to take out, but I haven't been able to find any research about it, at least. So if you guys know of any quantitative finance studies that deal specifically with treasury spreads, then let me know. I have found some papers that talk about profitable strategies in treasuries. But these strategies are not things that you would do with futures. These strategies are things that you would do with the individual bonds, and they're complicated, so I don't know if they make sense. But there are some strategies that are well documented on that, but not with trading the spread. So I don't know what you do with that one. But surely there must be something. There's some magic in there on that I'm missing, I think. I would like to get more into it. Like I think that we could put a little bit more risk on in order to trade the spreads and stuff, but it's just been a long time since I felt like I really, really knew what the spread was going to do. You know? Look back on the charts and see how many times there's a washout first before moving in the proper direction. You know, I've been that subject has been coming up a lot lately, because it seems to me that you get this sort of a thing. Well, okay, so like yesterday's market is a good example. is like it's trading in a range. And so you say, "Oh, I want to short it." What you actually want to do is wait for it to come out of there and then short it. And you get this sort of thing. And I see that a lot, right? But it's just as common to see this, right? So any way that I have tried to play that sort of a thing, this is what the price action people talk about, and every strategy that I've heard from them, I'll go back to this and it seemed to work. I think the reality is that what really happens is when you're in a range, it's random, and so it could break out of that range or not, and it's random. And that really what you want to do is you want to know which way it's going to go. And if you know which way it's going to go, then you take the opposite side of it and it's fine. Right? So what you could do is if it comes to the bottom, take one contract. If it comes out, take another contract. And then if it doesn't go, puke. And if it reverses, then wow, amazing. Right? I think that's really the way that it goes. It's about catching someone on the other side or driving after their stop. Yeah. You know, it was something that was funny to me was it was a YouTube video and they were talking about this and they were saying it was they called it like a liquidity stop out, right? And I'm like, well, that doesn't make sense because that's not what liquidity is at all. Okay. Orders being stopped out, that is not liquidity, right? Those market orders, and the other guy is taking the liquidity against it. No, I think it's more complicated than that. Again, like just think about how we know that the market makers actually work, right? They're largely trading based off of a correlation and managing their inventory, essentially, right? So if they know what the spread is, how much it's going to deviate, they're going to take the high end of that range and they're going to take fills against it. And the simple fact of the matter is that if there's somebody that needs to buy a ton that day that's going to push it out of the range, they don't know that at all, right? And then they'll stop taking orders. They'll have to puke, and that's when you get these places where it just really runs because the market makers are pulling their prices then at that point, right? I think that's the reality of it. And that it really comes down more to knowing which way it's going to go and catching a good price that's going the wrong way, right? And so all of this other stuff about getting stopped out and everything, it's not necessarily so much an intentional thing as it is that it's just naturally going to happen based on how the game is played. They don't have to make it happen. It will just do it on its own. Have you found any? No, I already answered that question. Seems to be the case that some big news trumps small news and that insiders trump everything. Well, it's not that simple. It's just, again, what it comes down to is how many orders, right? How many orders come in and take a trade off of something. And when you start to think about it from that perspective, like what are the things that are going to control how many orders come in, right? Well, the significance of the economic number is certainly a factor, but it's not the only factor, right? The context of it around it is going to be another factor, because if that is economic number is the number that is uncertain and kind of answers the big question in the market, then there's going to be more market participants watching that, right? So that's going to result in more orders. And then how different that number is from what the expectation was, that's going to affect how many orders come through. But then another thing is, like, what are the existing positions? Like, do people end up having to reverse positions because they changed their mind based off of this piece of news, for instance, right? So that's what you got to think of is how many orders. So the exercise that we practice here on this stream every day, really, although we don't focus on it so much. Maybe I need to find a way to talk about it as the game, make it a game a little bit better. As we come in and we say, okay, we had this news. What is the net cumulative delta change that we're going to get from this news? Right? So today was 10,000 contracts down, and now we've had 10,000 contracts back up, which is not what I would have predicted. I would have predicted that by the end of the day, we'd be down 30 to 50,000 contracts, right? But that's what you're trying to predict, right? So you got to think about what are the things that might be predictors of that. Orders are what we're trying to predict. 23, huh? Right back. I'm quite surprised. 5 basis points up and 5 basis points back down. Chile's new socialist president, Gabriel. Oh dear. I didn't know that this was going on. Gabriel Boric vows armed violence will not be tolerated and calls for a total ban on gun ownership. Of course. Yep. You can be that guy too if you want to do the homework. I remember a friend heavily invested in a mining company, and he would sit across the valley of their mines with binoculars and count the trucks coming out. Oh, that's awesome, dude. I was just laying down a counter argument for pure. Well, the counter argument for pure news trading, NASDAQ killer, is that there are some of the largest forces. Why am I having a hard time finding words today? I don't know. Some of the largest forces and therefore the biggest moves have absolutely no relationship to fundamentals at all. Right? These are the options gamma trades and the index funds rebalancing and the broker dealers replenishing their inventory at the beginning of the month, right? Now, I would still put all of those things under informed trading. That's why this is the word that I've created for it, is informed trading. I don't say we're trading the news here on this channel, right? We are informed traders. That is, we are looking for any piece of information that we have that will directly predict orders, right? So when I say that, that means I'm not saying when I see this chart pattern that predicts orders. That's not it. Okay, that's something generated by the market. We're looking for a piece of information from outside of the market that effectively predicts orders. One of those pieces of information could be the way that an index fund tends to rebalance its inventory, that they do it the last week of the month, and that this is how much they have to buy or sell based off of what the index did, right? Have you read the book? No, I've never heard of that before. Right? So it's not pure news, it's informed trading. And informed trading is going to take into account seasonality and the strategies of different types of market players and all of these other things, right? Feel a little out of breath. Sometimes I get this thing where like I get super relaxed and then I start talking a bunch and then I'm out of breath. Plus it's a little hot in here today. I don't know what's with that. I guess probably the AC should be turning on and I have it closed. Hold on a second. Now, the binoculars thing, this is another subject that I haven't really gotten into, but it's a big subject in quantitative finance right now, is alternative data, right? Is what other sources of information could we use that we could potentially use to predict orders? And so there was a thread about this from one of my friends on LinkedIn. They said, "What's the weirdest thing that you'd seen in there?" And apparently, there's a lot of these firms that have been like using satellite images to count how many cars are in the Walmart parking lot. That they've been doing stuff like that. I don't want to be scholarly on this, but I would bet that a good AI can predict. Why? Why do you think so? Like the whole thing is that um it seems like a lot of people have tried, and I have never seen a piece of research that showed that they were really able to do it. The best that I've seen is using the previous day's move to try and predict how much it would move the next day. And it just really ends up being a lag of price. So it's really not very effective for trading. Good concept. What do you mean? What's a good concept, live action? What, informed trading is a good concept? Thank you. Because I worked really hard to come up with that. Don't you think it's just like when you understand the order flow driven model of markets, the way that the market behaves makes so much more sense. There is not another model of market behavior that is really has explanative power. The best competitor that there is out there is that insiders have complete control and can just screw around with it. And so when you take that kind of a model, though, that's not any model that would really have any kind of behavior that you could predict or that you could identify quantitatively, other than that you're likely to get screwed over all the time, right? But when we take the order flow driven view of markets, it allows us to quantitatively explain why the market moves the way that it does, and explains a very wide array of empirical observations that we have about the markets. So the order flow driven view model of markets is really the model that I think is the way, like, our best understanding of markets right now. And informed trading is simply my branding for what I believe to be the best way to try and take advantage of what we know about the order flow driven model of markets, which is to say that there is pieces of information that is not generated by the market that we can use to predict future orders. For instance, seasonality, understanding about other people's strategies, breaking news, options positions, etc., etc., etc. And that's information. It's all about information, but it's not just using price and past price, right? It's something that's directly going to cause it, because technical analysis is all about find a pattern that has some sort of correlation that's, and we don't know what causes it, right? That's the whole thing with technical analysis, right? Informed trading is, we need to have a piece of information that directly suggests that we'll see orders in a certain direction, right? That and it's really hard to find a situation where that piece of information isn't factored into the market, but actually it happens all the time. Even though it's really hard, because the market is just not informationally efficient, right? So that's where we get into informed trading. I don't mean buy price, I mean the spread bid and ask. Well, if you created a market making strategy that utilized the spread in addition to a couple of other things, then yeah, that does work that way. But to come in and say when the spread does X, it's likely to reverse here and that sort, that's it's too simple. Meat and potatoes trades are conditions for breakout runners. Everything else is just gravy. Yeah, well, but I mean, that's the same thing that we're saying, right? Like here's the thing. Here's something that I've been thinking about a lot. That is I think kind of the next big idea that I need to get across to people. Markets are complicated. Okay, why markets move the way that they do is really complicated. The uh, amount of information that is out there is really complicated. Again, if this was not so, there would be no need for a market. The reason that we need a market is because there is so much information to process and it is fragmented across so many different players that it is simply impossible for one entity to look at all of those pieces of information and correctly factor them in to a fair market price. And that is why we have a market, because it's the only way to fairly aggregate all of that information. Okay. So markets are incredibly complicated. The answer to trading markets is not to just pretend that it is not complicated and think that it's simple and just have this one simple thing that seems to make money. Everybody has this idea that I'm just going to find this one market pattern and I can just keep a laser eye focus on that one pattern and I'm going to see it and then I can consistently trade that. And if that was the case, then I would already be a millionaire because I would have found that pattern. Okay. And I really don't think that it exists. Okay. No, the trick is having a complicated and nuanced view of the market and being able to have a simple trading process for being able to trade it, right? So we can come in and we can have all of these factors that are going to factor into which way price is going to move. Our trading process is identify all of those pieces. Based on those pieces, if they're all going one way or there's one that's just really dominant, and so we have a really good idea of what direction it's going to go that day, and then we use the edges that we've found in our understanding of the stylized behavior of markets to be able to find a good entry. And that primarily involves like 3 or 4 things. One is either trying to catch the edge or utilize an iceberg to get into your trade, to try and catch it when it's going the wrong direction, to time your trade in line with meta orders. So if you have a meta order, you're going to see it like this, and it's going to go like this, and this time period is going to be about 45 minutes, and then you're going to get this. So that's the other edge, right? Or that if you had a move like this and you still think there's a really strong meta order that's going to go the other way, you want to get this way, right? Okay, that's it. So now we've taken something really complicated and we've simplified it, right? Primarily by doing a lot of the work about what is our directional bias for the day beforehand, when we have the time to think about it and be complicated about it, right? So that when we're sitting here and we're executing, it's simple. And I can sit and I can yap with you guys about it even while trying to manage the trade. Although when you're really looking for it, you do really have to pay attention, I think, because you really want to see that the order flow is in line with your theory. That I think that there's going to be 10,000 contracts buy, that I am seeing a couple thousand contracts start to come in, and there's some degree of trend in the cumulative delta and yada yada yada. So there you go. It's not about them simplifying markets. It's about having a simple trading process that makes trading something incredibly complicated simple for you. How do you get the directions for the day? Well, I have to look through all of the different predictors of order flow that are relevant to that day. Okay. So here are the main ones that I rely upon. Okay. What day of the week is it? Because there's more money is put to work on Wednesdays. A lot of positions are closed on Fridays, but there's also really big news events on Fridays. Okay. What is the seasonality? So for here in the treasuries, the most active time of the year is at the beginning of the year, and that's when interest rates tend to rise. And then after about mid-April, May, until about October, it tends to be a down period. And then there can be a volatility period in September and October. And then generally speaking, treasuries sell into the end of the year because there's usually big rallies in the stock market at the end of the year, right? Okay. Seasonality. Okay. What economic news is slated for the day and how important is that economic news? And then, of course, everything else that we have about news, like what the market expectation was and how big of a difference between it that was and what we thought the positioning of the market was. And for that, I'm just determining that based on, what were the last moves? Did it move? We moved up yesterday. So sorry. Yields moved up. The treasuries moved down yesterday. So when we got this news today that was, I think hawkish for the treasuries, they moved pretty big, but it came back quite a lot, probably because there was already a lot of people were starting to go short, right? And then the next thing that I'm going to be looking for is strategies based on large institutions. So the biggest one being that at the end/beginning of the month, you tend to see more buying in the treasuries than usual. And the same with the cycle for the treasury auctions, which is going to be a tricky one because usually on auction day, it's like they'll sell into it, but then afterwards they'll buy. Now that the government is not going to be buying as many securities each time, we might see some ugly auctions again. So we keep an eye on that, right? And then options gamma, trying to look at the options activity. There may be interest at key points, and crossing those key points can create imbalances that will kind of either constrain price or make price explode. Right. So those are all things that I'll look at as predictors of order flow at the beginning of the day. And before we get in here, right, when I come in, I show you the charts and I say, okay, like what happened overnight, that's the first time that I'm seeing it. But before that, last night, and while I'm in the shower, I'm sitting and going through in my head, okay, what are the things that are most likely to be predicting orders today, right? It's a complicated thing, right? But it's actually quite simple because I can go down through the list of the things, see what's relevant to that day, and I'm doing it all ahead of time, right? Wow, Tesla is down 7% today after announcing that the company will lay off 10% of its workforce. That's nuts. That is the order flow dilemma. There's always someone on the other side. Big money will sandbag a range to suck traders in. Remember, it's hard to trade a market with size. You will move through levels and end up trading against yourself. I had a friend holding so much size into company, it took a month. Yeah, exactly. Oh, you didn't hear that news, NASDAQ killer? Tesla is going to lay off 10% of its workforce because Elon Musk is concerned about a market crash. Yeah, no, live action is right. Like again, here's the bigger picture. The thing about markets that everybody gets wrong, that is counterintuitive. It's the thing that retail traders, the biggest misconception out there. It's such a big misconception. Every time I say something about it on Reddit, everybody's going to disagree with me. But it is a very well proven, empirical fact. Markets are inelastic. the demands on liquidity are much stronger than the available liquidity available, and the people willing to trade against those liquidity demands to try and enforce true value. Okay. So if somebody comes in and they have to buy a lot of the stock, it's gonna move it. And the ability, you got to realize that there are funds out there that are like purchasing like 10, 20 or more % of companies in some instances, right? So yeah, that's going to move that. They have to split that out across several days, and there's this huge world that most retail traders are completely unaware of about how these big traders execute trades like that, block trades. And that is the thing that makes the market so hard, right? So the orders are the thing that matters, but sometimes you can get really big orders that there's no way you could have known that it was going to come. No way. Unless you were an insider. LeBron James becomes the first billionaire active NBA player. I did not know. Last time I checked these numbers, LeBron James was worth 500 million and Oprah was worth like 2 or 3 billion now. I was like, who would you rather be, Oprah or LeBron James? Because Oprah could continue to make money until she dies, right? Whereas LeBron James, probably his earning potential goes down after he retires to some extent. I would rather be Oprah. I'm kind of like Oprah. Or at least that's the business model, I guess, of a YouTuber/influencer. It's been a long session. We've talked about a lot of different things. It's kind of fun when, like, I mean, I feel like I'm talking about the same things, but we're always just relating them to different questions, right? But it makes me happy when the questions that you ask and the conversations that we have are useful to anybody that's watching this that's new, right? So. What? What's this about? Oh, yeah, okay. The conservative right in the country really doesn't like Gay Pride Month. It's okay. You know what? So can I share another idea with you? This is a little bit more controversial and political. Okay, so don't y'all like click out, okay? Because I got to know what you guys think about this one. So we've heard about the hierarchy of needs, right? That, you know, at the bottom you've got like food and shelter and all of these things, and then you have like you need a sense of belonging, and like at the top of the pyramid there's self-actualization, right? And these are the things that people go after to be happy, right? And when you get to the top is self-actualization. Yeah, it just goes to show you don't have to be a genius to make money. I have a couple of multi-millionaire friends who can't read. Really? Wow. That way you have chicken. Anyways, at the top of the hierarchy of needs is self-actualization. Okay. Now, what do you do when you are self-actualized? Then what? What comes after self-actualization? Does life become boring? Well, I kind of felt like I was at that spot for a while where life had become boring, but that's just me. I just tend to be bored. But no, there's actually, once you've completed your pyramid, there's another level that is way more interesting. And that is helping everybody else complete their pyramids, right? Helping other people become self-actualized, right? Well, when I started thinking about it in that perspective, I started to realize there are some communities that have problems because the reality of it is that less of their population has been able to achieve that self-actualization, um, because they've been like a historically disadvantaged group for whatever reason, right? There are less people that have become self-actualized. And so they don't have those mentors to be able to help other people in that space become that self-actualized person. So if you wanted to help those disadvantaged groups, the answer is not to give them some sort of advantage in like the education and hiring process to try and equalize things out. The answer is to have more people from other groups that have become self-actualized come in and to help individuals achieve that self-actualization, right? Typically, the first place that you start is with your kids, right? But if you're really truly successful, you're going to have lots of opportunities to help other people get there, right? And if you are in a group like that, um, and you kind of have the opportunity, then you should keep in mind that, oh, like my responsibility is to turn around and to help other people become self-actualized, right? But the thing that's interesting about it is that um, it's still a pyramid, right? So if I'm helping somebody become self-actualized, then really what I should be doing is going back to the pyramid and starting at the bottom. Because what often happens is people have a shaky foundation in the pyramid, right? They aren't eating well. They aren't exercising. They sit around all day. They have unhealthy habits. The base of the pyramid is weak, and that makes it hard to receive that sense of belonging and everything on top of that, right? So the first thing that you always want, that you'd always be going and doing, is saying, are you exercising? Are you eating right? Are you sleeping well? Right? I'm having a boy. Do you have suggestions on boy names besides pork chop? Because last time around, we spent a lot of time thinking about what the name should be. And this time we haven't really thought about it at all. So we're probably going to be spending the next 12 hours arguing about names. Porky. No, I don't think so. I am a boy maker. What's with that? I think it has to do with when, for whatever reasons. I think the way it works is like the earlier in the cycle fertilization happens, the more likely it is to be a boy. Because there's like a chemical difference in the vaginal canal that makes male sperm more likely to get through. So I think that is why. Because we had a lot of problems where when we would try right when we were supposed to, and it wasn't working. And so basically what happened was when we gave up and we just were doing it whenever we wanted to, and we ended up doing it before she was ovulating, and that's when it started working. So I think that's why. I don't know. I thought that I would enjoy having a little girl, but I guess that's not going to happen. And you know what? Probably I'm better equipped to help boys, right? Indoctrinate them with the family business, and it does excite me because I don't know if that's the way that they're going to go, but I think that there's a very high probability that they will. I think at the very least that Asher has a brain that is a lot like mine. He's probably ADHD. And so I think that he could get interested in finance. And I basically have the opportunity to train a prodigy, or whatever you call it, prodigy. There's a possibility that Asher could become a trading prodigy, because you get a person that will understand the true empirical behaviors of markets from a young age, right? That's massive. And then you're going to go to school. He's already going to know a lot of that stuff. He's going to push it there, and and he knows, he would know where he wants to go. So whatever it is that he decides to get into, I think I'm way more well equipped than my parents were to know what it is that he's going to want to go into and how to get him there, right? Because that's kind of like I have it mapped out. Like, here are the things that your brain is good at, and here are the best ways to go about doing that, whichever one it is he ends up choosing. So that's kind of exciting. Whereas if it was a girl, maybe she would do that. But then there's also, she really good chance that she just wants to get married and have kids, right? And how do I prepare them for that? I don't know as much about that. Although I think I've done okay. I take that back. I think I've done okay on some things, but like, the thing is that a lot of the stuff that I know is like what I wish I had known when I was 19. It's all the stuff that I learned between 21 and 30 that would have been really nice to have known at 19, right? But what is it that you do when they're between the ages of 3 to 8? And I think that with the stepkids, didn't really know, and that most of the time I didn't really end up doing anything. Now I think that I have a clearer idea of what I'm supposed to be doing when they're 3, which is actually really kind of weird stuff, but I do think I got something going, or plan here. But then you get the ones that are on teenagers. Don't know what to do with them. And I'm defaulting back to, okay, well, you got to eat well, you got to sleep well, you got to exercise, and hoping that puts them on a solid enough foundation that they figure it out. Because the problem that I have is that their schooling experience is so different from mine. I don't know how to. I would call my kid Mark. So it would be preferable that a name has 2 syllables, like Ash, or 2 syllables. Anyways, the oldest is 14, and I'm already like, I'm not sure what I'm supposed to be doing. I don't think that we've gone too far off track, but there's things that have been concerning. Let's just say. The youngin, I think we know what to do, but I think that I found out a little bit too late. So I think I'm hoping the second one will be a lot better. I really don't want to get that personal into it, but the sort of challenges that they deal with at school and stuff is very different from me. Because like me, like, I didn't really talk to people that much when I was at school until I found my people, and then I was with my friends, and they were a good group of kids, so you didn't really, with this one, I think that something I've noticed kids do, and that I think he does sometimes, is they want attention, and so they get it by just being annoying, and so I don't think that his social skills are like top notch, but it does appear that he's found a group of kids that he does get along with and that he gets the attention from, but I'm not sure if they're the right crowd, because I don't think that they're the kids that are like doing well in school and that sort of stuff. So yeah, he's been lacking motivation in getting schoolwork done. So I don't know what to do about it, because that was never a problem that I dealt with, right? Biden is speaking right now. I haven't heard my wife up and about, so because they haven't called yet. I don't know what time I'm actually going in. Maybe I'll have some time to go to the store. So here's a thought. If you were, what would you show me who your friends are, and I will exactly, NASDAQ killer. And I'm not 100%. So the thing is that his friends don't want to come over to our house because we're conservative and they're not. So it's like, I don't really get to know what they're like, but that already kind of concerns me, right? Just because it's like, well, you have certain beliefs, that's fine, but are you getting your schoolwork done? Do you go to sleep on time? Do you exercise? Are you physically active? Right? Can you bet probably not. What is it? They should all do track. That's what they should do. They should be on the track team, because anybody can be on the track team, right? To be on the basketball team, like not everybody gets to be on the basketball team, right? But everybody can do wrestling or track. I don't know if not everybody wants to do wrestling. So you do track. Go be on the track team, yes. Okay, so just a thought, as the crypto appears to be falling apart, FTX making alliances with IEX, very interesting. Yeah, so I was talking to Patrick Rooney the other day because I was trying to find information about the broker tech data, right? Because but he doesn't work with trading technologies anymore. He works for FTX now. So, and apparently Coinbase bought the Fair Exchange. So that's another thing that's going on. So there actually are some things happening in the crypto space that are really interesting. So it actually seems to me that right now would be a good time to get into the cryptocurrency world, if not for the still existing risks of stable coins and other scams and market regulation coming in. So I don't know. But if there's a possibility that well, at that end, monetary tightening is not helping the cryptocurrency world. And right now, like this morning, cryptos have been trending down, and it's not good for Bitcoin when they trade into the weekend, right? So I'm not saying go out and buy Bitcoin, but if you're a true believer, your time to buy may be coming soon. IEX is run by a huge banker trader from Royal Bank. Yeah, I don't know, man. The gist of that is I see both very strong opportunity in the cryptocurrency space and very strong risk. But I personally am just so fed up with the abuse and scam and irresponsibility in the cryptocurrency space that I really don't care how big it becomes or whatever. I just don't want anything to do with it right now. I would rather, I'm much more interested in understanding the empirical behavior of markets and understanding our responsibilities to invest and to invest well. And I'm more interested in that. So they just do what they do. This is why in my country we beat our kids, or you can send them to the boxing gym to get beaten. Yeah, maybe that's what I need to do, is send the boxing gym. Well, I am thinking, I'm sitting here like, okay, Next year he's in 9th grade, right? So that's like your first year of high school. So that's when like transcripts actually start mattering. If I start seeing C's, then maybe it's time to be sent off to private school. Like, you're not going to be happy about it. So I would just get the good grades. You know what I mean? Like, I know that's always the trope in movies, right? Is that the kid was doing poorly and so they get sent off to a school and go off the deep end, or it's going to be one of thems. It's going to be one of thems. Hopefully it doesn't come to that, but hopefully the focus on the base just fixes the motivation problems, and then we're fine. Next week's economic calendar stinks except for the Friday CPI. Well, CPI could be a big number, but I don't, I kind of feel what you're saying, Live Action. By the way, Live Action, I totally forgot. You were talking yesterday about the roll-off, and I was saying I don't think that they actually sell. And that is the case. So I went and I looked at their statement on rolling off the balance sheet, how much it was going to be, and what they already owned and so forth. And the basic gist of it is that the amount of securities that they have expiring each month is way higher than the amount that they're supposed to be reducing the purchases by. So they will be, it is basically, they're still going to be buying. They're just not going to be buying as much. So that's why I say that the roll off of the balance sheet, where this is going to matter, is it's going to be in the bill auctions. So there could be some bill auctions that are difficult. I think based on what they're saying in there, that the securities that they're going to roll are going to be more likely to be the longer term ones, but I'm not 100% sure about that. Maybe that would be a place that you could do some more research. But so I'm in the next month, I'm going to be watching all of the auctions very closely, right? But it doesn't mean that the Federal Reserve is not actively selling. It's just they're letting more of the securities expire, so they're not rolling over as many of them. So it just means they won't be buying as much, but they actually will still be buying quite a bit. So I don't know. It's going to be interesting to see. But I think your larger point though is this is going to be the summer, man. You're going to have periods of just absolute snoozer weeks where it seems like nothing happens and it's not worth trading, and then bouts of high volatility and a lot of sideways action in the S&P 500, I think, unless we really are going to go into a recession, and then we might have a really, really active summer. And you can just, if that's what's going to happen, just go short the S&P 500 right now. Just go short right now, hedge your whole portfolio and take it off at like 3,400, 3,600, 3,400. Yep, that's the play there. If we're really, I don't know if that's what's going to happen, but if you think we're going into the recession, I think that's the play, is just go short E-minis till 3,600. And who knows how much excursion you get against you, but you got momentum in your favor today, at least, right? All right. Do you still want me to now I'm just going to leave it as non-farm payrolls. It was saying the title for today should be I'm Pretty Effing Smart. I'm not going to do that. We'll just keep it as non-farms. Well, let me just take a quick gander here. It looks like that the Japanese yen had a pretty good move down today. They actually extended down lower, even though the treasuries did not do that. The treasuries had a much larger pullback back this way. So it does kind of look like I could have made money going along the treasuries, but it ended up being like at 2.96 that I had to have taken it, not 2.8. So I am glad that I didn't take trades after that. On the initial move, I probably could have taken a trade, but then if I had done that one, I think that what would have happened to me is I would have said, hey, let's just let this ride all day, and then it would have all come back and I would have bailed. So that wouldn't have been a very good trade either. But now I kind of have a feel for what this market is. If I get a $20, $30 move, I probably, in that situation, in today's situation, I should probably take it back because everybody's already short. And so the risk right now is these aggressive short covering rallies, right? No, I'm not going to make that the title. Anyways, if you have any suggestions for baby names, maybe like come back and post them in the video after it gets posted, right? But I am going to be heading out. I will see you guys. I'm going to be working on videos, but I don't think we'll have a video until next week. Yeah, so it's time to go. We got to go and see what the wife's doing. And if there's not, I might have an opportunity to go and deal with my food and car and stuff. So I will see you guys next Monday. In the meantime, stay profitable, friends. Or at least don't lose it all.